Naspers is a multinational media giant with stakes in internet businesses in emerging markets, pay TV and print media. The group's most significant assets are a 35% stake of Chinese internet company Tencent and wholly owned Multichoice in Africa. Naspers has a market cap of 800 billion rand, a PE ratio of 108 and a dividend yield of 0.23%. Now we could talk all day about Naspers.
We normally do.
We normally do. It's a favorite of ours. It's a favorite in the hot stocks portfolio. It's in the media limelight at the moment because it's had a fantastic run on the back of Tencent flying in Hong Kong. Is it overvalued? That's always the big question with regards to Naspers.
Yeah, I think a lot of the anxiety of the last 2 days with regards to the sales is that Ma Hu-Ting, known as Pony Ma, we were joking in the office this morning, we're all going to change our surnames to Ma so we can go to China and say, oh, it's Ma Byron and Ma Sasha. But I think
it's like Oppenheimer in South Africa.
Exactly.
Okay.
So he sold a small stake and brought his overall stake down to 9.65% of the company, which makes him what? And I think I calculated he sold just over $400 million worth of shares, but that's only 0.21% of the company. So the Chinese stock exchange is being ramped up. Why is it being ramped up? Because housing has probably gone very cool, and they're very small investable class of assets.
Gambling culture there.
Massive.
You know, they love speculation
Massive.
and love pushing those prices all over the place.
Yeah, but we had to look because also at the same time, Chinese GDP numbers came out, right? So how much has Chinese GDP grown relative to their stock market? Well, I had a quick look, and remember that Tencent is listed in Hong Kong and not Shanghai. So that market is up 250%. This is Shanghai over 16 years. How well do you think the Chinese GDP growth has been?
This morning, so I'm not going to ruin it for you.
Oh,
so you can tell us.
Yeah. Okay. Well, it's had more than a 9-fold increase, nearly a 10-fold increase.
So you're saying that the stock market has severely underperformed GDP growth?
Yeah. Exactly. So. Mix in the culture.
So maybe it's about time we're seeing a bit of a re-rating
in the market. But as we know,
Byron,
market is not economy.
Well, let's get back to the educational theme now. Why is Naspers assumed or involved in, and how is it involved in education? Immediately to me, you have a look at Discovery Channel and History Channel in terms of its multi-choice offering. And then, of course, Animal Planet, that's
Nat Geo Wild.
That's my favorite show. Yeah. And sport, of course.
That's the utmost favorite.
I don't know if that's educational.
Of course it is.
Online, do they have any presence in terms of online education?
Well, I mean, if you recall, Chris Baker actually called the TV business what? A legacy business. It's like 18 months ago when he was still in charge. And you look at him and you go, huh? But you realize that he's well aware that there's a changing and a transformational. So I think Naspers have the ability through their TV businesses to bring more education online, because the next big theme has to be online education. So if anyone can do it in the South African and African context, I think it can be Naspers.
And then talking online and educational online, because that is going to be a huge theme. And you get people like Mark Zuckerberg wanting to connect the whole of the world.
With balloons, right?
With balloons and drones and so on. And Elon Musk as well, talking about Google, connection. Because this means that you don't actually have to go to school. You can learn all of this stuff online. Companies like LinkedIn, Apple are getting involved, supplying iPads to schools. They've got iTunes where they offer, university products through iTunes. Do you see that within those businesses as great opportunities?
It has to be a massive growth, because you know as well as I do, I mean, if we try to get into Yale and Harvard today, you've got youth on your side, so you'd probably stand a better chance than me. Plus, you're smarter than me. But I think the point is that there's massive oversubscription, and those people can't dilute themselves. So Harvard can't say, oh, well, let's build 10 campuses and accept all the admissions, because that would dilute the brand. But what you are able to do is go to Princeton economics in an online and get taught by exactly the same economics professor who's giving back to society. Now, what they've found through platforms like Udemy, so these are the people who offer the online courses, if you pay for a course, you're more likely to finish it. But they found that the unpaid courses, 90% of the people don't finish them, But more astonishingly, you would think that this was opportunities for everybody, but all the people entering in the courses, something like 96 or 97% of them, already have a graduate's degree. So it's actually clever people wanting to get more clever.
That's where Elon Musk and Mark Zuckerberg are looking to connect the entire world, because I suppose it's also access to this kind of information and knowing that that's around, which comes with education and comes with a great internet connection. Let's have a look at the Naspers share price and see how it's done, because it has. It's been all over the place. We see it shoot past 2,000 Rand 2 days ago. Tencent took a bit of a hit. It's come back. Are you still hot on this one, Sasha?
Yeah, I think everybody gets the valuation metrics wrong. And you know, when you read in there, it's on 108 multiple, just remind me what Amazon is. It's on like infinite, because they're always losing money. Why? Because they're investing heavily in their newer e-commerce businesses. So Tencent trades on a 48 multiple with a between 30 and 40% growth rate. So what does that put it on a peg? It's Peter Lynch, the guy that made the peg ratio famous, puts it on about 1.4, 1.3. So yes, you could say it's a little bit overvalued, but what passes for entertainment in China? Very little. So I'm still hot on Tencent.
Of course, you know, the Chinese government don't really allow those big multinational competitors to come in, Amazon, Facebook. So Tencent are really dominating, especially in the gaming, which is extremely profitable, where you see Alibaba is more capital intensive. Gaming, you're selling people lives and stages for games.
Sounds
so
dumb,
selling
doesn't
nothing for money.
But you've played Candy Crush, haven't you?
No, I haven't.
You never?
I
played. I got addicted.
I'm scared I'll get addicted.
I did. I had to delete it off my phone. So these things can be very addictive, and people do pay up for the next level. So it's an entertainment as much as everything else, while they're rolling out all the e-commerce stuff and all the associated stuff.
I think you touched on a very important point where you can't really look at Naspers as PE, because they are reinvesting so much of their money into that e-commerce world, which is still losing money at this stage. So I know you're hot.
I know you're hot. Yeah.
I'm hot. The hot stocks portfolio is hot on it. It's our biggest position. We're willing to ride that wave. It is going to be volatile, but we're both hot on that.